In today's interest rate market, I want to focus on the 10-year note. The 10-year note realizing some further strength today. We're seeing the 10-year note rally once again today. And if you look at the trend, the recent trend, we're seeing the 10-year up 5 out of the last 6 trading sessions. So we are seeing a bid coming back into the longer end of the curve here the last couple of days. And when you look at the pricing structure, we're looking at about a 129.15 handle on that 10-year right now. So again, firmly in the middle of the 129 range. And when you look at some of the driving factors today, I think you got to point to the trade data. That's one of the areas where there's just not the clarity that the market's looking for. There was some hope coming into the last 2 days, over the weekend, I should say, that basically that they were going to continue to move forward. But now China's kind of backpedaling a little bit. And they're also indicating that if this impeachment situation continues to push Trump further into uncertainty, that they may not be so eager to get something done without knowing how he's going to fare through this. So again, that uncertainty, I think, is part of the reason why we're seeing the bond market rally, particularly the long end of the curve. Looking at the long end of the curve, you look at there's definitely seeing that 210 spread narrow. Again, it's still 19 basis points. So there's certainly a nice premium between the 2s and the 10s when you look at the yield, but we are seeing it coming in now the last couple of days as we're seeing again the uncertainty as far as the longer end of the curve. Maybe again we're seeing some buying pressure there. The short end of the curve is still holding pretty solid because the Fed has basically indicated, at least from the short term perspective, the next several months, they don't anticipate moving, but we are seeing the long end of the curve, adjusting for the probability that maybe if they can't get this thing resolved, that we will see further economic weakness. And looking at the yields, we're seeing the yield coming back down now below 1.8, actually 1.78 today. So it's again, that's lower than the range of the last week or so. And if you look at the last month, if you look month over month from the middle of October to the middle of November, we're looking at a range of 1.97 on the high end and 1.69 on the low end. So we're actually trending back down just below the middle of that range. So again, some repricing here as we're seeing the long end of the curve rally today. The short end of the curve holds pretty steady.